still back on. So one more guest before we wrap up this fireside chat session is a company called Addepar that you may have heard of. They are based in the U.S., and the CEO is here today to spend some time with us. His name is Eric Poirier. Please give him a strong and big round of applause.
Great. Thank you, Jonathan.
So Eric's going to talk to us a little bit about his business.
Yeah, so we're going to spend a little bit of time talking about wealth. Let's do it from the perspective of the client, right? So anyone who has money, the most important thing you can do is make sure that the money is being allocated in a way that lines up with your goals and objectives. As obvious as that sounds, it's actually quite hard. And so we started Addepar in the wake of the financial crisis back in 2009. And in doing so, we started talking to lots of friends of ours who frankly got hurt really badly during the crisis. And so as we dug in to figure out where they're underserved, what we found is actually the basic questions that they were having a difficult time answering. First and foremost is understanding what they own in the first place. They have a bunch of dollars invested. They're allocated across not only stocks and bonds and ETFs, but they also have investments in private equity, hedge funds, directly owned positions in companies. They make those investments through a variety of different legal entities. So maybe they invest out of trusts or holding companies. And they have accounts across banks as well. So there is no common data language across the financial system. And so what Addepar has done is approach this first and foremost as a technology problem to integrate all the data that describes these investment portfolios. By bringing all the data together in one normalized way, then we're providing financial advisors what they need to answer clients' questions very quickly to ensure that the assets are actually allocated again to satisfy the client's goals. So when you look at the distribution of assets, you have 70-some-odd trillion dollars worth of assets globally held by high net worth and ultra high net worth individuals. 70+ trillion dollars, right? So in the US alone, here I've highlighted in the middle the big banks. And so you've got Morgan Stanley with $1 trillion worth of high net assets, about the same with Bank of America, JP Morgan. Off to the side, you see family offices and RIAs, foundations, endowments, pensions. All of these types of firms and all these types of allocators have been using Excel and people as their middleware. Our point of view is actually building software to provide that middleware so that people can actually make sure that they're serving clients, that they're allocating their dollars with confidence into investment outcomes that are the right outcomes. And so this is working quite well. The assets we have on our platform have grown dramatically. Today we have $800 billion on our platform. Beginning of last year, we had about $300 billion, and we expect to be over $1 trillion by the end of Q1. And so basically, by solving a foundational problem, saying that the financial services writ large needs a normalized data language, and we need to have a central platform to pull together all the information, that's really led to this type of growth.
And what about it in your background sort of made you particularly sensitive to these issues?
Yeah, so I've been a software engineer, for my whole life. I started my first company when I was 14, doing load and stress testing for websites. And so I've always used technology as a way to help other people build stronger businesses. I worked at Lehman from 03 to 06 in fixed income analytics. So for better or worse, I built a bunch of the tools that were featured in The Big Short, really getting really close to the mortgage back and credit default swap land. But interestingly, I joined Palantir in the middle of 06, and I spent a lot of time with big banks and hedge funds and so forth. Bridgewater was my first client at Palantir. And so really get an up-close look at the realities that large asset allocators face. And so, basically reframing that problem as fundamentally a technology problem, I think was the advantage that we had early on. And being a technology problem, starting with the data part of it, once you pull together all the data, just recognizing that that's how you actually bring about much, much faster iteration cycles so that people can optimize their portfolios.
So obviously we've seen a lot of movement in sort of these robo-advisors, the Wealthfronts, the Betterments of the world, and it seems like they're getting into virtually every sector. Are there areas where software and tech just can't really play? Is there areas where these advisors that are probably terrified of companies like yours can feel like they've got a franchise that is not going to get disrupted?
So the approach Addepar is taking is radically different from the robo-advisors. We're putting the human advisor front and center with the client. And so we're enabling the advisor with tech and data so they can be much more resourceful in serving their clients' needs. And so kind of what I was saying before is the larger the end client, the more complex their situation is. What that also means is the more likely they're going to need a well-trained and well-equipped human advisor.
Great, and you obviously have had a very successful fundraising history. You've done very well. Great, some really tier one investors in your capital table. Question I have for you is how you think about internationalization. How you think about breaking into new markets. Obviously, don't give away anything that's confidential, but we'd love to hear about how you think about your product and your service globally.
Right. We have a tremendous amount of demand globally. We have been laser focused on the U.S. for now. As I mentioned before, the segments that we've gone after are family offices, RIAs, and banks. And so some of the banks we're working with are large multinational banks. The approach we're taking is to start with the U.S. portion, and then over time scale with them into other regions. And so that's how we'll grow into Europe and Asia. We actually do have a lot of growth right now in Latin America, South America, and Canada, but we haven't moved into Europe or Asia just yet.
You mentioned the word scale, and that's the sort of the theme of my next question, which is as you think about not only scaling the business, but scaling yourself as a manager, as the leader of the company, what are sort of the things that you've learned in your management style that maybe is different as the company grows, that you've learned maybe through the School of Hard Knocks?
Yeah, so there are certain things when you're running a really ambitious company that have to be timeless and have to be universal. And so having the mission focus, having core values that you live by, and you live by every day, and basically surrounding the top talent in a culture and with an environment that allows each person to do their best work. And so that all sounds great, but actually making it happen is very hard. And so, we've made a point to really just, one of the core values we have is best idea wins. And we really, having a leadership team that's incorporating the best ideas from across the company, synthesizing those, and then giving people that voice and taking action on it, is one of the things that I think has made Addepar, again, just continue to evolve over time in a very aggressive way. And so that really starts with leadership. It starts with me setting that direction for the company, and then just reinforcing that, for example, in the monthly all hands I'll do with the company.
And just getting back to growth for a minute, how are you, obviously you've got a lot of assets under management, that's very impressive. How you think about growth, what are the other metrics that are relevant for your business and what you're solving for in your path?
Yeah, so on the family office and RIA side, there are 20,000 plus RIAs in the U.S. alone. There are many family offices that are harder to find because they're not registered. And so by having something now that's valuable for family offices, we're kind of using our existing clients to go find new clients. And so the things we track are referral rates, and then once we have prospective clients in our pipeline who we're talking to, we look very closely at how long it takes to get them signed on as new clients, and once we get them signed on, what's the time to value? How fast can we go from contract signed to being fully onboarded so that they can run their firm in a tech-enabled way? Right.
That's great. Well, I want to thank Eric again for coming up here and spending some time with us.
Thank you,
and
Jonathan.
for all of you for paying attention and being a great audience. Thanks so much.
Right. Thank you.